What's up, everybody? Welcome to the Stocks Channel. We're still seeing a lot of volatility in the stock market, and on a day that tech went up, we absolutely got routed in industrials. So we're getting mixed signals all across the market, so let's go ahead and dig in deeper and see what's going on. Before we get into the charts, please remember to help me out by smashing that like button and subscribe to the channel so you can follow along with all of my updates. First up, we're going to take a look at the S&P 500 SPY ETF. So let's go ahead and crack open this chart and see what's going on in the stock market today. Alright, so with today's price action close on the SPY ETF, we see the price going down negative 0.34%, and we're still holding up just above that 50 EMA. So remember that 50 EMA is one of the last lines of support for the bulls, and we're now closing below our support trend line. So if we do start closing below that 50 EMA, and we start closing below the 0.5 Fibonacci retracement level at 337, that's going to make this chart look very bearish, and I would expect to see the bears start invading the S&P 500 and start shorting on resistance levels. So if the price action does close below the 50 EMA, all of these support levels will become resistance levels because previous support levels are newfound resistance. Now we can also see that the 5 EMA is crossing below the 13 EMA as well as the 20 simple moving average, so we do have a short-term bear trend. When we have a short-term bear trend, we want to start looking at price targets to the downside. And right now, if we break below the 50 EMA, we have the price targets of 337 at the 0.5 Fibonacci retracement, and below that, it will be $333 at the 0.618 Fibonacci retracement. Don't forget about that gap that we opened back at the end of September, and the top of that gap is around $331, and that gap will close on a SPY level of $329. So if you're a bear, you absolutely want to be watching these levels as price targets, because if we start bouncing off of either of these levels and we start breaking through resistance, it could mean that the correction is over and the bulls are back in control. But right now, the bears are starting to take over, and we see evidence that the bears are winning because the short-term trend is turning into a bearish trend. Now, to keep this chart alive for the bulls, it goes back to the point in saying that we need to stay above the 50 EMA. If the bulls can find support at this $338 level, which will be the last line of defense for the bulls, at least in the short term, the bulls can fix this chart as long as they can come up here and close above $341. So 341 was our previous support, so we're looking for that level to now act as resistance. So we'll go ahead and add a resistance line right at 341, and if we can start breaking above 341 and getting closes above there, you can also see that we'll also be closing above our resistance trend line. So $341 is going to be a key resistance level, and if the bulls can't break above that level, it means the bears are going to step right back in and start driving the price targets lower. So we did expect this to be a very volatile week going into the election and with everything else going on right now. So the technicals are telling us there is a lot of downside risk coming. So we really need to see if the bulls are going to step back in or if they've really disappeared until we see some of this volatility go away. Now remember, we are getting oversold on this market. So if you are a bear and you're not already shorting this market, I don't suggest you start now because we could still see a 2 or 3 day bounce off of these levels. So trying to short when the market's already tanking like this is like trying to FOMO into the market when it's going parabolic as a bull. You really don't want to try to short this market. Instead of trying to short this market, you're much better off trying to buy off of these support levels and look for good entry levels on stocks that you've been wanting to get into. So look for these levels to act as support, and you'll know these levels are support if we get down to these levels and we start to bounce and break above these resistance levels. You can buy in off of these support levels, and remember to manage your risk by setting your stop losses below those support levels. So for all of you that have been asking me, how do you find an entry and an exit on a trade? Your entries are going to be buying off of support levels, and setting your exit would be your stop loss below that support level. If we do start going down, you'll get stopped out, and you can look for the next opportunity to bounce off of the next support level and set your stop loss there. That is one way to enter a position, and it manages your risk because you can set your stop loss to be whatever risk you're willing to take, whether that be 3% or 5% below support, whatever you want to set it to. That will manage your risk, and now you're entered into a position. Now you manage that position when it starts to run, you're looking to see if it's going to find resistance. So let's say we go down to 337 and we start bouncing. You could buy off the bounce, set your stop loss, and if we get up here to 341 and we fail to break through and we get rejected, you could take your profits, or you could hike up your stop loss just in case we start bouncing back up and break through that level. So there's lots of ways to manage a trade. This is just one of them. And if you're buying off of support levels and you're setting your stop losses, you're going to put yourself into a position where you're more likely going to make money because you have unlimited upside potential, and you're more likely to get stopped out of your position quickly if the market does start turning against you. And you're more likely to lose less money if you set these stop losses, because if the market goes against you, you'll automatically take a small loss before it becomes a larger loss. Now remember, it's absolutely risky to be buying while the market's dropping, and that's why you want to wait for that confirmation bounce. And remember, the people that are willing to take on risk and buy off of these levels are the people who will make all of the reward. There's no reward without taking on some level of risk in the stock market. If everybody could get money without taking on any risk, everybody would be rich, and this would be a very easy game. So treat this market as a falling knife right now, and you don't want to get too bullish until we start getting confirmation bounces off of one of these support levels and we start to see the technical trend reverse from the short-term bear trend to a short-term bull trend. So be patient and watch these support levels. Next up is the NASDAQ 100, and this is the Triple Qs ETF. And we see the NASDAQ 100 was by far the most bullish sector today, closing up 0.78% in the green and holding up above our support trend line and closing above the 50 EMA. So the tech bulls stepped in today and bought the dip, and we see the price action is still trading below the 20 simple moving average. So the price action is still somewhat bearish, and the short-term trend is also bearish because the 5 EMA is still trading below the 13 EMA as well as the 20 simple moving average. So the tech bulls aren't out of the water yet, but they are consolidating inside of this wedge, and we can see the price action has been coiling and tightening within this support and resistance trend line. And either way this breaks is going to be the winner. If we break to the downside, the bears are going to get their way and they're going to see these lower price targets. But if we can bounce off of this level like we started today and break above resistance, we're likely to start seeing our upside price targets. So on the bear side, your downside price targets are right around that 50 EMA, which is right around $278. And if we break down below the 50 EMA, you have two more price targets you're looking for. The 0.618 Fibonacci retracement at $274 and the close of this gap right around $272. So remember, when we have that short-term bear trend, which we do, we're looking for downside price targets unless the bulls prove otherwise. So for the bulls to take back control of the NASDAQ 100, we need to start getting price action closes above the 20 simple moving average, and we want to see the 5 EMA cross back above the 13 EMA, and then we can become bullish on the NASDAQ 100 yet again. So right now, it's the same thing I said with the S&P 500. I don't suggest you try shorting now. I would just look for opportunities to buy off of support. And if we start bouncing off of these support levels and reversing the bearish trend into a bullish trend, you're going to be very happy you're not shorting and you're looking for opportunities to buy. So instead of trying to short the market in a bearish trend, you're much better off looking for entries and buying positions and accumulating. And then the next time the market starts running, you'll already have your position and you can start taking profits as the market runs higher. So manage your risk with stop losses and watch for these support levels to act as support. And if we get bounces off of these levels, you can start sizing into a position. Next up is the Dow Jones Industrial, and this is the DIA ETF. And we see the Dow Jones is by far looking the worst today, closing down negative 0.84% and going all the way to the bottom of the Bollinger Band. The price action closed just right on our 0.618 Fibonacci retracement level of $274. And you can see at this point, it looks likely that we're going to close the gap down around 272. So when we're in a bearish trend and we have bearish price action, we're looking for these price targets below. And now that we're only one price target away, it's likely that we're going to see the gap close at 272. However, we are at the 0.618 Fibonacci retracement at 274. So if we do start to bounce off of this level and we start breaking back above the 50 EMA, there is a chance that we go back into a bullish trend and that this gap never actually closes. So you can never rule out the possibility that this is the bottom, but you'll know because we'll see a confirmation bounce and a break back above that 50 EMA. But right now the trend is bearish on the Dow and the price action is bearish on the Dow. So I would think we're likely going to see 272, the close of this gap, and then possibly the bulls may step in and start buying up the dip. Now we do need to acknowledge that there is one more gap all the way down here at 264. And if the Dow Jones starts to go and continue in this bearish trend and this bearish trend starts to strengthen, we could start heading down towards the gap at 264. So remember, gaps typically get filled on these ETFs. And if we're going to start filling gaps, now could be the time and we could go down much more on the Dow. So we can't rule out any possibilities, and we need to be watching these support levels very closely. And if we do get a bounce off of these levels, we're watching to see if we can break above resistance, and that'll let us know that the bulls are back. But right now, this is absolutely a falling knife, and you don't want to try to guess where the bottom's going to be. Next up is the VIX, which is our fear indicator, and we see an increase of fear today with the VIX going up 2.74%. The VIX is now in the 33s, and we know when the VIX gets in these levels, we could see huge volatility, and we could see 3 to 4, maybe even 5% swings in a single day of trading. Now, it is a little weird that the VIX is in the 30s, and we're only seeing price levels move within 1% today, and I would have expected to see more volatility with the VIX this high. So right now, the number one thing to watch on the VIX is we do have this resistance trend line where the VIX has been forming lower highs. So if the VIX can get up here to about 34.6 and find resistance, we could see a temporary bottom in the stock market while the VIX starts cooling off and bouncing off of this resistance level. But the opposite is also true. If the VIX breaks right through this resistance like it's not even there and continues to skyrocket, we're going to see a lot more downside in the market. So the VIX is the number one indicator we want to pay attention to, because a rising VIX and a break of this resistance level is going to tell us that there's a lot more downside left in the stock market. If the VIX does find resistance and starts heading back down, we could see that 2 or 3 day bounce and we could continue to trend back higher. However, remember, we are in a short-term bear trend, and that could be a short-lived bounce before we start resuming back downward. So you need to be very defensive with your money right now. And if you're buying off of support levels, manage your risk very well with well-positioned stop losses. The same is true for the bears that are trying to short this market. You need stop losses just as much as the bulls do, because you could equally lose money if the market starts to bounce and reverse to the bull side. If you're trying to short, you're gonna lose your shirt. So next up is the financial sector, and we see financials getting flushed out below the 50 EMA, closing down negative 1.8% today and getting back close to our support trend line. So it does look like financials came up here to our resistance level and got rejected, and ever since we got rejected at resistance, we've been trending back down. So the price action is bearish and the short-term trend is bearish. We see the 5 EMA trading below the 13 and the price action closing below all of our moving averages. So the financials look bearish, and we're looking to see if they're going to hold up at the support level and see if we can get a bounce off of support. But right now, we need to watch to see if that level will hold up as support, because it's likely as well that financials can just break right through it and continue to head lower. So you can see we're starting to see signs of bear price action and bearish trending in the stock market, so we need to become more defensive. Next up is the industrials, and we see the industrials also looking bearish, closing back below the 50 EMA, and that 5 EMA starting to aggressively cross to the downside. So we're in a bearish trend and we have bearish price action. And don't forget, on the industrials, we have this gap that was never filled down at $72. So if we continue to trend downward, that will be our price target on the industrials. And from today's close, that's still a drop of about another 6.5%. So remember, there's no guarantee we have to go close that gap. But as long as we're in a downtrend and we're seeing a bearish price action and a bearish trend, we're going to start looking for lower price targets until we start seeing a reverse of the trend. Next up is healthcare, and we see healthcare closing right on its last line of defense at the 50 EMA. The short-term trend is also turning bearish because the 5 EMA is crossing below the 13 and the 20. So if healthcare closes down lower again tomorrow, the bear trend will be picking up momentum, and that is not a bullish sign for the S&P 500 to see all of these sectors struggling and going into a bearish trend. Next up is the US dollar, and we see the dollar pretty much going nowhere today and still in a bearish trend. So there is one silver lining in all of this. That is, if the dollar continues to weaken, we could see asset prices inflate, and that would be bullish for the stock market. So right now, the dollar is still trending downward, and we're still getting bearish price action closing below the 20 simple moving average. So we're going to say that the dollar is going to continue to trend lower, and we should see lower lows and lower highs forming on the grand scheme of the long-term bear market on the US dollar. Next up is gold, and gold is still consolidating, which feels like it's been in this consolidation range forever now. So we're very close to seeing if gold's going to break out above 1930 and start running, or if it's going to break to the downside. Remember, gold typically does better when the dollar gets weaker, and the dollar is in a bearish trend right now. So wait and see if gold's going to break to the upside or the downside before you make a trade. But we're very close to knowing, because we are seeing consolidation is running out of time, and it's going to have to break out of this wedge soon. Next up is silver, and we see silver also consolidating right below $25. So we'll see if silver is going to break to the upside or the downside. So we need to be patient and see which direction silver is going to break. And if it can break above 25 and we can get a bounce off of that level as support, we will be bullish on silver. If it breaks down below this support trend line, We have to be bearish on silver and we don't want to be a buyer. Next up is Apple, which is our market moving stock, and we see Apple going up 1.35% today, and it did help carry tech to higher prices today. So Apple did find support right at that support trend line and the 50 EMA, which was right around the 0.5 Fibonacci retracement at 114. So that was an important support level for Apple, and we see buyers starting to step back in. The price action is still closing below the 20 simple moving average, and we still do have a short-term bear trend. So the Apple bulls still need to start getting some bullish price action, closing back above 117, which is where the 20 simple moving average is, and we could start to see the Apple chart turn bullish again. But right now we have to give benefit of the doubt to the bears, because we're closing below the 20 simple moving average and we still have a short-term bear trend. However, the bulls did hold up above support, and that's the first step to reversing this trend, is the bulls need to continue to buy off of these support levels and drive the price of Apple higher. Next up is Tesla, and Tesla is still looking bearish because we're still finding resistance right at that 20 simple moving average, and the price action is still closing below the 20. The 5 EMA is still trending in a short-term bear trend, and we can see this resistance trend line is suppressing the price of Tesla below the trend line. So the Tesla bulls need to do the same thing the Apple bulls need to do, and they need to get a close above the 20 simple moving average, which is a price level of right around $431. The only good news for Tesla is it is trading above the 50 EMA still, and that has been a very critical support level. As you can see when we zoom out, Tesla was previously bouncing off of the 50 EMA as support, and it could be doing that again. But the chart is looking bearish in the short term, and until we see a reversal of the short-term bear trend, we have to give benefit of the doubt to the bears, and the Tesla bulls still have work to do to reverse this trend. Next up is Bitcoin, and Bitcoin is getting very close to our price target of right around $14,000. You can see the exact price level is $13,850, and we got within striking distance of that price target today, so it looks like we're going to have no problem getting there. You can see the Bitcoin bulls are driving Bitcoin higher on higher volume, which is always a bullish sign when we see price action going up on increase of volume. So it looks like the Bitcoin bulls are going to get their way, and we're going to see a price target of $14,000. Once we get there, I wouldn't be surprised to see Bitcoin take a second to cool off and consolidate some of these gains. So to summarize the market, as you can see, we are starting to see bearish price action and bearish trending in some of the sectors, but by far technology saved the day today, and a bullish day in technology saved the S&P 500 from closing below the 50 EMA. So don't forget, volatility is still here in a big way, and the VIX is now trading above 33, so you need to be very careful with your money and protect it closely, because you don't want to get wiped out on 1 week of trading. So be patient and let this play itself off, and look to buy off of support levels and look to start accumulating positions, but don't be in a hurry to jump all in on the market right now. Volatility is a great time to be a trader, but you need to be patient and you need to wait to see where the support levels are going to be before placing your trades. So please remember to help me out by smashing that like button. I really hope these videos are helping you out, and if you haven't already, go ahead and subscribe to the channel so you can follow along with my daily analysis. Thanks for watching, everybody. Good luck out there, and as always, I will see you in the next episode.